Good morning, students. Today we will be seeing the further journal entries. The journal entry for creating reserve is profit and loss appropriation account debit to general reserve account. For transferring the profits among the partners, profit and loss appropriation account debit to partners' capital or current account. We know that when the profit is transferred to the owner, their capitals increase. So here we can see that profit and loss appropriation account debit to partners capital account or current account, being the profit is transferred to the capital or current account. Here, when there is a loss, we know that due to the loss, the capital is reduced. When the capital is reduced, it is debited. So partners capital or current account debit to profit and loss appropriation account. We know that reserve means an amount which is set aside out of profit to meet the future requirements. We are given here one question that A and B are the partners in a firm in the ratio of 3:2. Firm earned a profit of rupees 50,000 during the year. They decided to transfer rupees 10,000 towards general reserve. Pass the journal entries. First of all, we'll have to transfer the profit from profit and loss account to profit and loss appropriation account. So first entry will be profit and loss account debit to profit and loss appropriation account. Rupees 50,000. This is the total amount of the profit. Now we have to create a reserve. For creating the reserve, we pass the journal entry as profit and loss appropriation account debit to general reserve account. The total profit was rupees 50,000 and 10,000 is the amount which is to be transferred to the general reserve. So the remaining profit will be distributed to the partners in their profit sharing ratio. This 40,000 is the profit which will be transferred to the partners capital account. Profit and loss appropriation account debit to A's capital and to B's capital. 40,000 will be transferred in the ratio of 3:2. 3:2 it means 3 by 5 and 2 by 5. So this 40,000 will be multiplied by 5, that is 8,000 rupees, and 8,000 into 3 for A, that is 24,000, and 8,000 into 2, that is 16,000 for B. Let's see, we are given another question here that Mohit and Shobit are the partners in a firm. Firm earned a profit of rupees 75,000 during the year. They decided to transfer 20% of the profit towards a general reserve. Pass the journal entries. Profit and loss account debit to profit and loss appropriation account. First of all, the full amount of the profit will be transferred to the profit and loss appropriation account. Then profit and loss appropriation account debit to general reserve account. 20% of the profit is to be transferred to the general reserve. It means 20% of 75,000 will be 15,000. Now, the remaining profit will be transferred to the partner's capital account. Profit and loss appropriation account debit to Mohit's capital account and to Shobit's capital account. 75,000 is the total profit and 15,000 we have to create as a reserve. It means the remaining profit rupees 60,000 will be transferred to Mohit and Shobit. As there is no ratio given, in the absence of any information, the profits and the losses are shared equally. So 60,000 will be distributed between Mohit and Shobit in equal ratio, that is 1 by 2. So 30,000 rupees will be transferred.